Good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday. Hope you guys had a great weekend. Hopefully, some of you guys had a 3-day weekend with Columbus Day yesterday, October 12th. And we're going to keep this short and sweet today, guys. It's actually a very slow day today. And we got news probably later in the week. We got earnings to the CPI and PPI later this week. We got the retail sales, we got the New York Empire Index, so we got some manufacturing, inflationary numbers. Of course, we'll have the initial weekly jobless claims on Thursday, and then some of the manufacturing as well. So later this week we'll have some more news, but today is this stock market's kind of mixed. It's some light trading. The Dow is down a little bit, but Nasdaq's up a bit. The Fed's going to be releasing their meeting minutes, FOMC, to be released later this afternoon. So that could change things if there's anything that might catch any of the traders by surprise. There's also a little article I saw on Market Watch. The bond traders, there's a lot of bond traders that are showing some concern about the new quantitative easing, which seems to be kind of not a matter of if, but more when the Fed's going to do that. And what that is that when the CPI report come out on Friday, if it shows that it's too tame, the Fed most likely will be trying to take measures, which is probably buying assets to increase the inflationary number because they're finding it too tame, and they figure that deflation's not good, obviously, as well. So they're concerned, obviously, that the bond's biggest concern is that inflation. They don't. It might it erodes away the value over the time of the bond. So they don't want, obviously, to see too much inflation. So that's what they're concerned about. Deflation to them, obviously, short term is okay, but long term, obviously, not so good. But let's go ahead and take a look, see what the bond market is. The rates today are not as good as they were on Friday. They have dropped a little bit, as you can see. It dropped down to about the 103.40 range here. So we had a little bit here. We do got room to drop a little bit more. It's possible we could correct a little bit more. Again, this afternoon, the Fed minutes, the price could be built in, so we may not see much movement there. We do got more news later this week. So, this is just, again, it's a necessary thing. We need to be brought back closer to a 10-day moving average, and then the trend line that kind of started up here, where we're probably closer right around here. We're probably right here will be the trend line. So as we kind of drifted higher up, we need to be pulled back closer to something more realistic. Basically, essentially, it's an oversold position. So you guys have a great day, and I'll see you tomorrow.